Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Because life is fueled by money. So we talk about real money on Talking Real Money, and it just seems to work out. I'm Don McDonald. Over there is Tom Cock. You're out there. We are so glad you're listening. We hope you'll call if you've got a burning question about money burning a hole in your pocket or whatever it's burning. 855-935-TALK is our number. 855-935-8255. Free and easy, too.
That's easy, yeah.
Yeah. Let's just go to the phone.
Sure, why not?
Yeah.
Okay.
Rand's been waiting. Rand, welcome to Talking Real Money.
Hey, Rand.
Thank you. Yeah, hi. I listen to your show and love it. I think I listened to your show this afternoon. I think you've already answered my question, but I'll ask it anyway. What is a 100% fiduciary? I thought a fiduciary was a fiduciary. Why the percentage?
Oh, this is where this industry just would love to put the blindfold over your eyes, Rand, and say, don't worry, I'm a fiduciary. Here's why we say 100%. Because a lot of people in this industry, in fact, I think most firms, are what we call duly registered. They are registered as a registered investment advisor, and then they are registered also as a broker-dealer. And when they are a registered investment advisor, they have a requirement by their registration to put your interests ahead of theirs. When they are giving you advice as a broker-dealer, they have no such requirement. Only they have to live up to the suitability requirements, or I guess now it's going to be the best interest requirement. So that's why we say only use 100% fiduciary, period. Does that make sense?
Yes, it does. I appreciate it. I've been listening to you since you were Boeing at like $30 a share. You're really high on Boeing. And
must be me.
Unfortunately, I bought into it and then I sold it. But what is it now? About $300 a share?
Yeah, I think it's $350. I mean, we both have always liked Boeing because we work here in Seattle. We think it's a great company. We don't recommend individual equities. Don used to do a little bit of that, I guess. And of course,
Yep,
I covered the company when I had the TV show because I used to interview the guys that ran Boeing back then. So I guess you could say promoted it to some extent then. But anyway, no, I mean, and our portfolios include Boeing, just a very small amount of
a little tiny bit. But you know, the thing is this: the investment industry, Rand, epitomizes the art of obfuscation. They hate transparency. They love opacity. They don't want it to be that clear. You're absolutely right. Logically, it seems logical that if you're a fiduciary, you're always a fiduciary. If you're a doctor, you're always required to act as a fiduciary. If you're a lawyer, you're always required to act as a fiduciary. This is probably the only business that has a fiduciary requirement that has so many loopholes.
And remember that this was all going to be fixed after the debacle of 2008, where Congress said, hey, you guys really we can't do anything about markets, but let's fix the advice we're giving people. And now it's 2019, on our way to 2020, and this is not a fix, by the way. This is simply a kicking the can down the road. As Don said, I think for most people, it's just going to be even more confusing.
It's going to be even more confusing, and as long as... And this is not political. This is just American. As long as we continue to allow the financial incentives that allow lobbyists to lobby our representatives, as opposed to the representatives representing the people they're supposed to represent, they represent the people who give them the most money. You and I don't have the kind of money that the insurance industry or the brokerage industry has to influence these laws. We just don't.
Does that help, Rand?
Yes, it does. Thank you very much.
You're most welcome.
It.
And by the way, thank you, Rand, for a call. This is something we've been working on for a long time because this comes up. We have told you here on this show, just go to dfaus.com and type in your zip code. And because we found out that they're sending you to people that are not always 100% fiduciaries, we finally had to do our own list. You go to talkingrealmoney.com.
It's tiny.
I know. You go to talkingrealmoney.com, scroll down to where you see the help wanted sign. The dude with the help wanted sign, that's the easiest way. Click on there. You get two things. You get a list of advisors and you get a form that you should take into anyone who may help you, because if they sign that form, boy, you'd think they'd have to live up to the fiduciary standard at that point. You would think so.
Well, if they sign it, at least you've got something
that's true.
to hold over their heads. I don't know how powerful it is. I'm no lawyer. It's not written by a lawyer. But at least it shows. And here's the thing you're going to run into is that any advisor who is not always acting as a fiduciary is unlikely to sign that.
No, I think most of them will say, well, my compliance department won't let me sign it.
My company won't let me do it.
They won't let me do it. So sign the deal. But I think that's a start. And no, that's why we say only 100% fiduciary purely.
All right, here. Yeah. I just put in our zip code in Bellevue again.
Yeah, guess
into
what
the
comes
DFA
up first.
US site.
Yep.
That other company that I can't stand comes up second, and we come up last.
Oh, that uses some dimensional funds, but also uses equity index annuities, really? Wow.
Yeah. And it's funny, the rest of them I see on the list are actually probably pretty good firms for most of the ones that I know. In fact, one's on our list. Well, two, us and another firm. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Just want to let you in on a secret. In a few minutes, Tom's ducking out of here, so it'll just be you and me. So
why
give me
you
a call.
have to pick on me? Come on.
855-935-TALK, 855-935-8255.
Oh, because you're easier to talk to or something, you mean? Give me a break.
I'm sometimes nicer than
I wouldn't have said that either, by the way.
To you guys, not to the other people.
Come on.
I'm meaner to the other people. See, Tom has to leave early because he's got to go to a very, 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 very early Women's World Cup practice. Like 10 years early.
Yeah, because she won't be in
10 or
the
12
next
years early.
12 years, something like that.
Right,
Her last game of the year. I don't see a lot of them because they're on Saturdays.
I'm all for you going to see your
sneaking off an hour early. Don't tell the boss, okay? Because I don't want to
half
get in
hour.
trouble.
Oh, that's right. You're going to get docked for this.
Probably.
Oh no.
I was there early today. How about that?
935 Talk. That's true. You worked hard today.
How about June 1955? Is that a year that you all remember really well? June 1955. Is that
I wasn't even a gleam in my parents'
June
eyes in June of 55.
Well,
June 56, maybe.
Okay, yeah.
What happened in 55?
Well, that is the best June. This is going to be the best June for stocks since June 1955. That's kind of a long time.
Really?
Well, I mean, assuming the market doesn't do anything wacky in the last
Usually
week.
it's sell in May and go away.
I
so
know.
June's
I mentioned
been
that
good.
today. I said, boy, how did that strategy work out? Yeah, I mean, the S&P 500 up 7.2% this month. The Dow Jones 7.7. Global portfolio 6.8. So
Wow.
you're looking pretty doggone good.
Well, the S&P 500 actually hit an all-time high. I think it was on Thursday.
I believe you're correct.
And early on Friday, the Dow broke through an all-time high, but then it
Okay, how come we never get the big headlines like it does when it drops 500 points in one day, the third consecutive down day?
Good news is boring.
I know. It's like, Dow's up.
Do you wait? You're going, wow. There's some families doing nice things for other families down the street. I'm going to tune in.
I don't want to miss that.
Como News tonight at 11 and watch that.
That's exciting. Okay, but the only reason I'm mentioning this because we don't spend much time on market performance is, do you remember May? May of 2019, like last month, 3 weeks ago.
I was thinking maybe there was a woman I knew named May.
Yeah, exactly. Well, she remembers you. But the point is, May was a crummy month for stocks, right?
And and the other thing is that everybody,
Jim
was
Cramer
saying
included,
in
by the
May,
way. Yep.
Everybody was saying, well, this is it.
Yep.
It's all over.
Time to sell.
This is going to be bad. You
Yep.
probably should just get out of the market and
Yep.
let it roll. And look what happened.
I know.
I mean, June has just been wacky. In fact, May and June were wacky. And this is what the stock market does to you.
It's a random event. You cannot watch this day by day. You cannot watch this month by month. The reason I raise this is the Wall Street Journal last weekend had the best piece of financial advice I ever got section, which I thought was very interesting.
I read that.
One of the
good.
pieces which I kind of liked was written by a guy, I think he's the vice president of AAII, and don't get me going on AAII, but what it was, he said, don't ever look at your 401k statements. Like sign up for
brilliant advice.
Actually,
yeah.
That's pretty good. I mean, other than rebalancing, and if you're in a target date
thing,
fund,
you don't have to.
That's
Yeah.
over. Or conversely, if you're in a managed portfolio, which I think most people should have today. In other words, there's a company that's buying, rebalancing when your money goes in. I think that's good advice for people like that because you don't make mistakes.
If you got the right start.
Well, indeed.
Yeah, if you had the right funds, the right investments to start, then you don't watch it. It's all these poor souls who've been sold a bill of goods by the insurance industry or the brokerage industry, who are really should look at their 401k and then consider doing it in such a way that you never have to look at it again.
Well, and we ran into one last week or the week before, which is a SEP IRA, where they have a broker picking individual stocks. I didn't even know that was being done anymore. Because think of the liability.
Well, no, it's perfectly legal.
Well, no, but they had like 12 securities in their entire account.
But that's okay. I mean, look, there are mutual funds out there that have 20 securities in them.
You blow that's crazy. I mean, she said, what do you think?
I don't know why
nuts.
people do it. Actually, I do know why people do it. They do it for the same reason.
Something about
that
talking real money. That was it.
They do it for the same reason that the Securities and Exchange Commission Chairman Clayton, who's a big dope.
That sounds political. That's not political, right?
No,
okay.
He's a dope. He's a dope. I don't care. I assume he's a Republican, but if he was a Democrat, he'd be a Democratic dope.
Okay.
He's a dope because this idiot... Sorry, Mr. Clayton. This idiot thinks that the public should have access to hedge funds.
Oh, my goodness. I read the same piece. Because mom and pop investors, they deserve a shot at a hedge fund. Yeah, why should it only be the rich that pay 2 and 20 or 3 and 30 if you're using Axe Capital? I mean, really? Hedge funds? Really? Really? Because they've done such a great job. Didn't they just have that bet with, who's that guy, the Oracle of Omaha? 10 years, the S&P 500 versus the 5 hedge funds the Hedge Fund Institute got to pick where they underperformed the S&P for 10 years. It's not like one quarter. Hedge funds have a horrible track record. By the way, they come in, here's the way it usually goes. They come in, they raise a lot of money. Somebody has found something in the market that oftentimes works for a period of time. And then the other hedge funds, who, by the way, have a lot of other bright people working there as well, and then it doesn't work, and then they flame out and go out of business. That is the traditional hedge fund. There are some anomalies, yes. But hedge funds in general, you're not missing anything, folks. You really are not missing a thing. And by the way, there was the book written about hedge funds last year where the author at the end of it said, somebody at the hedge fund told him, we're not really supposed to say this, but if you wouldn't mind putting in there, people should just go use index funds. They'd be better off.
They'd be better off.
I don't get as much money, but they'd be better off.
Costs matter. And I'm looking at the Barclay Hedge Fund Index. In 2015, the Barclay Hedge Fund Index. This is the composite of all the hedge funds. In 2015, which was not a bad year for stocks. It wasn't a great year, but they made no money whatsoever. In 2018, they were supposed to. Now, a bad year.
That's when you got it. Oh, yeah. That's why it's called a hedge fund, right?
They're supposed to keep you from losing money. In
yep.
the hedge fund index, you lost 5.25%,
which is probably, I'd have to look it up, probably the equivalent of a 60-40 portfolio.
Yeah, but they didn't protect your money on the downside.
That's the whole point.
They
you don't need
too
hedge
much.
funds. Did he really say they needed hedge funds?
He really said it. He said
goodness.
that these poor folks on Main Street didn't have the opportunity to make the kinds of profits that they could be making in hedge funds.
Which hedge fund?
Apparently the one he got.
How about just the boring old index fund? How about that fund? Yeah, that's for the little people. Sorry.
There is nothing special
Sorry, you
out
little
there
people.
for you, no matter how special you might be. 855-935-TALK is our number, 855-935-8255. I think Tom will be here for another couple of minutes, so you can beat up on him if you want before he gets out of here.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And your future awaits as long as you have the right plan, you invest the right way. It could be really great for you, but it could really stink if you fall for a lot of the schemes and scams that permeate the financial financial advice industry. As a matter of fact, there was a piece today in the Wall Street Journal, speaking of hedge funds, of Ponzi schemes.
Yeah, I saw that, how long it takes to get your money back.
And the thing, it was just the sheer number of these things.
Well, I mean, yeah, that's the part that people remember Bernie Madoff, right? Mm-hmm. Some of you remember Sanford. I forget his last name.
Alan Stanford.
No, Stanford or Sanford?
Stanford.
Okay.
Stanford.
All right,
yeah.
Just like the
serving
school.
time in a penitentiary in Central Florida. 110-year sentence he got.
Yeah,
Sir
probably
Alan.
not going to see the outside. But the part that most people don't remember, there's a lot of really small Ponzi schemes out there. And I'm only laughing because you could fix that by basically doing one thing, using a third-party custodian. Never give your money to either a small brokerage, because there have been small brokerages where they went out of business and they could not meet their obligations. And if you give people custody, so people gave Bernie Madoff their money. And Stanford, the money went into his portfolio, and I think he shipped it off to wherever it was.
A bank in Antigua.
Yeah, Antigua. So,
but
yeah.
Bernie Madoff, actually, one of the more interesting things about that article was the fact that Bernie Madoff did own an SIPC insured brokerage firm.
That's true.
And therefore, the SIPC, the Securities Investors Protection Corporation, was on the hook for some of that money.
Bill, they still haven't recovered all. I think it was a $16 billion fraud, and they've only come up with $11 billion. But that movie still seems like a lot.
Close.
Yeah, no, it's a lot. Yeah, and I mean, they had the receiver was a Mr. I forget his name. Was very aggressive. Was out trying to collect
But to your
the money.
point, it's the little ones.
Yeah, most people
that
don't
are
pay
the
attention to. Yeah.
This is the kind of thing where somebody in your service club or at your church or at the golf course comes up to you and he said, I've got a lot of success putting together real estate deals or oil and gas deals.
Oh, there's a new one yesterday that was in the press. A former Oakland Raider went to other football players and said, "I've got a plan to keep the Raiders in Oakland, and all you have to do is invest this much, and when it works, we're all going to make a lot of money." And he went around and raised like several million in $350,000 increments, and he no longer has the money. So they're going after him.
Spent it all.
Probably. Anyway, it was kind of fun. So.
But here's the deal, even with these smaller Ponzi schemes, if the Ponzi scheme operator is at all savvy, they can keep you at bay for a very long time. You may say to yourself, well, it's paying off. I'm getting checks. It must be good.
Oh, yeah, right.
Well, it can be good. That's Madoff's was great right up until 2008 when the market fell apart.
There was no more money to be had. Yeah, no, that makes sense. Do you want to go one more call, or do you want to wait till you're on your own by yourself?
Oh, we have to wait for me to be by myself. Right. And they probably called just to talk to me anyway. So
like everybody else?
Yeah, probably.
All right.
No, the reason is we only have about a minute left.
Yeah. So, back to that. Always use a third-party custodian. Mm-hmm. Never give anybody really the right to, even with our clients at Charles Schwab, we do not have the right to send money to anybody but them. That's it. Ever.
And number 3, if it sounds too good to be true, it's too good to be true.
Yeah.
That's a really simple
Well,
rule that
yeah.
everybody
Yeah, I
should
agree.
follow. It
Yeah.
really, if in an environment like this where you can go out and get a nice, safe 2% on a 10-year treasury, woohoo!
Big money.
And somebody says, I can get you a nice, safe 7, they're lying. They're lying.
It's not happening. Yeah, does not exist. Yeah, I agree.
There is no quibbling. No quibbling. I don't care how brilliant they are. If they say safe and 5%, safe and 6%, safe and 7%, any of those kind of numbers, run away. It is an absolute lie. The chickens may not come home to roost for several years, but they'll come home and they'll
Eventually
be
wake up.
roosting.
Yep.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Really important stuff here on the show. I'm Don McDonald. Tom's off to watch his daughter play soccer. You can give me a call right now, though, at 855-935-TALK, 855-935-8255. Want to know if you're doing it right or maybe doing it wrong? I'm going to tell you the truth either way. I know sometimes when you're doing it wrong, the truth hurts, but isn't it better to know and move on than to keep believing that you're not doing it right or that you are doing it right when it's just awful? I mean, really. 855-935-TALK is our number, 855-935-8255. And Scott's up. Welcome to the show, Scott.
Hey, how you doing today?
Doing great, sir. What's up?
I have a question about an inherited IRA that is administered by Edward Jones. And I'm wondering if I roll it into something else, do I have, well, can we back up a little bit? I'm already required to take required minimum distributions.
Okay.
So if I roll it into something else, because everything seems to be in individual stocks, am I now subject back again to penalties because of my age?
No.
Should I need that money for something?
No. Here's the thing you need to understand about an IRA. An IRA is its own entity. It's like a you. It's almost like a person. It exists no matter what's inside of it. So if you were to take your inherited IRA, and here's the easiest thing to do, you transfer it to another company. And I would suggest, how much is in it?
About $75,000.
I would suggest you go to somebody like a Vanguard, a no-load, low-cost mutual fund company. Move it over into their brokerage account in kind. Okay? In kind means you move the assets as they are at Ed Jones. Then when you get to Vanguard, you sell the stocks inside the IRA. Selling them inside of the IRA does not create a taxable event. They're protected, shielded by the IRA. By selling them at Vanguard, you're going to pay much smaller commissions to sell them. And then you can get it invested in a really broadly diversified portfolio with no-load market-based funds there. But you can continue your minimum withdrawals. That doesn't change at all. You don't have to take more out, and you won't get any kind of a penalty for doing so.
I think you answered my question.
I wish you the best. Thanks for the call.
All right. Thank you.
All right. Take care. Bye-bye. 855-935-TALK is our phone number. Got a line open for you. A lot of time left, and I really do want to give you a hand making sense of this money stuff. Now, bear in mind, under the new act that Congress is working on, now I forgot what the stupid name. Anyway, the inherited IRAs could change next year. Right now, you can inherit an IRA and take withdrawals over your life expectancy, whether you're a spouse or not. Next year, if the law passes, The what act? What's it called? I'll look it up. But anyway, under this new rule, you may not be able to take a life expectancy withdrawal if you're a non-spousal beneficiary of an IRA. But for right now, the rules apply as they are. So Scott's in great shape. He can just continue to take that money as he was. And it's important to understand that IRAs and 401ks and trusts and the like, these all exist as vessels in which the investments sit. We often confuse the investment with the vessel. We say, I have an IRA with blank mutual fund. You don't. You have an IRA with blank mutual fund in it. The IRA can move around just like you as an individual can move around. And your IRA can sell something and buy something else, and as long as it stays within that IRA, there are no tax ramifications for doing anything inside it. It isn't until you take money out of an IRA, a regular IRA, I just hit my mic, apologize, that you incur any kind of a taxable event. And with a Roth IRA, there is no taxable event. Just take it out tax-free. 855-935-TALK. Let's try and solve your problems. And I promise you, I'll do it honestly and in the best way I know how. 855-935-TALK.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Once again, our number is 855-935-TALK. And remember, if you don't get in during the show that's live on Saturdays from noon to 2 Pacific, 3 to 5 Eastern, you can call 24 hours a day, 7 days a week, and leave your question, and I'll answer it on the podcast, which you can find at TalkingRealMoney.com or on all of the big podcast services, including Apple Podcasts. And Tom, you're next. Welcome to Talking Real Money. Tom? Hello.
Hello.
Hello, Tom. What's up?
Yeah, thank you. I'm curious about the Social Security reduction at the end of next year, starting 2021. If you retire before the reduction, well, basically they want us to work another year and a half as baby boomers born in the late 50s. So I'm showing a reduction of about $230 a month if I retire after 2021. So if I retire before that, are you grandfathered in, or is everybody going to get moved over into the new plan? Is the question.
You know, that's a really good question, and one to which I do not know the answer. I'm going to have to do some research on it and cover it down the road because I do not know.
Okay,
I'll find out because I'm dying to know too because I'm of an early retirement age. So I will see what I can find out, and tune in next week. We'll find the answer for you.
Thank you very much. Thank you.
You're very welcome. So it's another sneaky way to get you to tune in next week, too. 855-935-TALK. That's our phone number. Give me a call, 855-935-8255. Next year, there's a benefit reduction for early retirement. There's something on the Social Security website about it. But no, this is an old thing. I don't know about a new thing. But if there is, I'm going to find it. I haven't read anything about this. If you know something about it, sure love to hear from you. I mean, I know there's a lot of talk about potentially cutting benefits because of the problems with long-term funding and the fund having enough to continue those payments past 2034. But just keep looking. I'm not seeing a thing. I'll keep looking, though. I'll see what I can find out. 855-935-8255. Dave, you're up next. Welcome to Talking Real Money.
Hey, Don. Good to talk to
Dave.
you.
Thanks for calling.
You're welcome. Don, I am a long time listener of yours. I used to listen to you when you were doing your radio show out of your attic somewhere in Denver or in Colorado.
Colorado Springs, looking out over Pikes Peak, yeah.
Yes, and I remember you telling us everything. Anyways, I have followed your advice at the time. I said, boy, that sure sounds good. I'm going to do it. And so I have done very, very well through the dot-com busts, through the mortgage stuff, through the ups and downs of the market. I just stayed invested. And everything turned out really well. So my question is, what I have now, because of all that and a few inherited funds from, this is all mutual funds from inherited funds from my parents, who also followed your strategy. I now have quite a tax bill every year, and I'm finding that I need. Yes, I need to pay. I need to pay estimated taxes, and what I'm finding is that between my cost of living, just living, and all the expenses associated with it, and my paycheck and paying taxes, I'm essentially left with nothing. And I was just wondering if you had any thoughts or ideas. I'm just breaking even.
I'm confused. I guess I'm confused.
I am reinvesting everything. I'm reinvesting capital gains. I am reinvesting dividends.
Okay. How much wealth do you now have?
Well, totally?
Yeah.
Totally is around $3 million, a little over $3 million.
And you are still working, I am assuming.
You are correct, sir.
And is this I'm trying to, where is all this, where are all these taxable events coming from?
Oh,
it's not just your paycheck.
I'll tell you, one of the biggest ones is Wellington. Wellington is a big one. High yield corporate fund. I do have an IRA. Of course, that's not taxable. Those are some of the places. Even the
I get it. You're reinvesting the income from those portfolios, but you're being taxed on it, so you're paying out about a third of it to the government.
You got it.
Okay, well, stop investing all of it. Take some of it out and pay the taxes.
Well, that's what I've kind of thought I'd do. I thought I'd take everything out of Wellington, which, I mean, I had an $18,000, I think it was, capital gains.
Do it slowly.
Payment. And I just thought about, I'm going to start taking Wellington and stop reinvesting because I'm not going to live forever.
Well, okay, here's the thing. One, I like Wellington. I've always liked Wellington. Even though it's actively managed, it's a good fund. The high-yield corporate, a little on the scary side, but it's Vanguard, so it's one of the better ones out there. If you are in a really killer bracket right now, you might want to consider, now that you've gotten to the point where they're throwing off a lot of income, if you want to keep an income stream for the future, you might want to consider looking at some of Vanguard's tax-exempt funds. Even though your income will go down, you won't pay taxes on it.
Are you talking about municipal bond funds?
They call them tax-exempt funds, but they invest in municipal bonds.
Okay, so I need to get the money to invest in there from somewhere, and if I sell, then I'll have a big taxable event.
But what you do is do it slowly. It slowly. Sit down with you. Do you have an accountant? I hope you have an accountant at this point. You probably should get one. Otherwise, sit down with the tax tables and calculate where you might slip or rise up into a higher bracket. Whatever that level is, wherever it is that you can get a capital gain and not get kicked up, not have bracket creep, sell enough to that point. Yes, you will pay taxes, but you just don't want to pay them at the next higher rate. I don't know if you're up to the 20% capital gains rate at this point or not. Because I don't. Sure. Yeah, you need to calculate that. But as long as you're staying in the 15% long-term capital gains rate, sell enough. Don't get to the 20. Then get it into the tax-free bond fund so that you start getting some income coming in that doesn't feel like it's hurting you. Now, remember, income coming in and reinvesting, even though you're paying taxes on it, it's not hurting you long-term. But
telling myself, and it's at first this was not a problem but as the years have gone by and things keep growing and growing and growing and growing, it has become a little bit more of a problem and a little more scary. So
as you get richer, you have to pay more in taxes, and that's why at some point in most people's investing careers, they start moving some of their fixed income over to municipal bonds because the net return, even though the gross return is lower, the net after tax return can be higher. And that's what I would suggest you look at doing.
Yeah, I'm very heavily invested primarily in stocks, but I also have some.
But you must have a lot of income generators.
Certificates of deposit. I mean, even with those, I could take those out. And
oh, of course. That would be the first place I'd consider going into an intermediate term municipal bond fund from those CDs, because your level of risk is going to be similar. You get a little volatility that you don't have in the CDs, but with what you have now, you're probably okay with that. And then it gets a lot of income off of your 1040, giving you some room to feel like you can breathe better. And it really is more of a psychological thing, but our psychology is important. 855-935-TALK, the number.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Sorry I couldn't get to all the calls. Remember, you can call us 24 hours a day and leave your question, and I'll answer it on a future podcast at 855-935-TALK. Or give us a call next weekend. Thanks so much for being there. Remember, we've got a great lunch ed class coming up, The Science of Retirement Income, in July. And it's a small room, so get your tickets now at talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?